Hi, my name is Shane Handy. I'm the founder of therationaltrader.com, and we're going to talk today about the next step here in the machine learning system. So we've been looking at we have implemented the use of volume profile to help us define key locations to enter, and we've been specifically looking at low volume nodes and the value area edge. All right, so we're going to talk about those two things today. There's a replay running here. I need to stop here before we can continue, so let me pause that. No, I'm just going to stop it. Okay, and so what we want to do is let's review sort of where we're at. This is the production chart, and you can see yesterday I was down $65. I like what I saw last week in production in terms of very controlled small losses, and you have the opportunity for the nice the day where you make the nice gain. I think I had that one day it was plus 600. And here's the problem that I see, or rather the refinement that I want to deal with here. And what we're doing is we've taken the let's see. Let's look right here. So we've taken the patterns of price action that we were traditionally using, and we're applying them now only at the value area edge or at a low volume node. All right. In fact, let me turn off. That music's a little loud. Hold on. Let me turn off the volume by price study, because that's going to cause us a little bit of confusion. And what we've been doing is applying those patterns only at the edge or at low volume nodes. Now, low volume nodes, there's a custom study that tracks those in real time, and that's what like this line is right here. That orange line is the nearest low volume node that's above price for these bars here, for these bars. Okay, these bars. Okay, and then what happens is, as price falls, another low volume node forms, and it's now here, and then very briefly it's right at that bar, and then it moves to this level. Okay, there's still a low volume node up here. Okay, but we don't care because it's too far away from price for us to worry about. So all I'm doing is I'm looking at the low volume nodes that are nearest to the price bar. All right, and if the low volume node is above price, it's an orange line, and if it's below price, it's a red line. And you can see that instance right here. Okay, there's a low volume node right there, and because the price level is below price, it is orange. And in fact, here's an example where you see it change. The low volume node is at this price level. It's at 76.12, but for this bar right here, it's currently above price, so it's orange, and as soon as price crosses through there, it becomes red. That's just to help you understand what you're seeing. What we're doing is we're taking the price action patterns, the pullback patterns, the turning patterns that we've used from the very beginning, and we're now applying them only at these locations, only at low volume nodes, and only at the value area edge. And the problem, there's really sort of two problems there. One problem is that the low volume node, this behavior here is something you often see, where it drives up to the low volume node and very quickly bounces off of it. Okay, and the patterns of price action that we use to help the machine learning system trigger a prediction aren't happening here at this low volume node. This happens too quickly. Okay, and that's because originally we didn't have this other criteria to help us identify a key spot, right? So we had to have a more complex pattern to help protect us because we weren't paying attention to whether or not we were at a key spot. Now that we are, we can change things up a little bit. I want to be able to catch that pullback. All right, the bar is orange because it says make a prediction here. What happens right now is the system goes, I don't see a pattern there, so it doesn't do anything. All right, and what I've been testing is a change to that. Okay, you kind of see the same thing right here. All right, sort of. There's a low volume right there. You're pulling up to it. This one's a little more complicated because you're also at the edge. All right, so this is a better example here. Right here, you pull back up to that low volume node. This is the spot, right? That's the spot we want to be laser focused on. Okay, let's see if we have any other cases here. The other case I want to show. You see it again right there. You see that? So just for one bar, for just a brief moment, you have a spot that says, okay, take a look here. And the problem is that pattern is not sophisticated enough. It's not covered into the current ways that we look at price to see if this is a place to get in. So what I've been doing, and I'm only talking about low volume nodes right now, not the edge. What I've been doing in this chart here for the last 2 weeks is testing a simplified look at the low volume nodes, okay? Because I want to be able, those are prime locations, and I want to be able to, I want the system to go make a prediction here. All right, and so what I saw over the last 2 weeks is that what I've been testing works pretty well. It'll see that I'm at the low volume node, and it'll make a prediction here without getting caught too much in the noise. And this is a big problem we'll talk about with the edge. All right, there's two cases though. This is just one of them, right, where you are pulling back to a low volume node and then bouncing off of it right away. All right, so the key thing I want here is I want the system making a prediction on that bar, so I have that working. And then the other one, let's see, do I have an example here? Sort of there. Let's see if I can find a better one. Here's another case where you're pulling back to the low volume node. Do you see? And you have just, and this one's a little bit easier because you've got really two shots at it to see that I'm bouncing off of it. What we're looking for is you have to have some kind of up bar to help you see that you're bouncing higher. So that what happens now is I'm going to get a prediction right there. All right. I'm also going to get a normal prediction right there. Typically, this second prediction we would consider too risky, so that we're going to have to talk about that later. But right now, I want to recognize that I'm bouncing off this low volume node, and give me a prediction right there. I'm still looking for the other example I want to show you. Hang on. Okay, so look at this right here. All right, so we're paying attention to this low volume node. It's right here at 7601.25, and it as this bar here trades, it moves up one tick to 7601.50. But you see what price is doing here? Whoops, wrong button. You see what price is doing here? It's just blasting through it. Okay. And what I want is, I want the opportunity to make a prediction. Am I going to bounce off of it? And then I also want the opportunity to make a prediction because I'm going to blast through it. This is actually not that good of an example because I'm blasting through it right into the point of control, and this is a place that we don't want to get in. So these bars are not orange because of that. So I need a better example here. So this is kind of both. this case, the market falls down, and there's a series of low volume nodes here. It's really the same area. It's just that it's moving around a few ticks as trading occurs in here. All right, and so we're going to get a prediction right there on the bounce, and then we're going to get a prediction right there on blasting through. All right, we often see it without this bounce. I'm still trying to find a good example. So the way this works here now, we're going to get two shots at this point. In fact, last week we got long. Is this Thursday? Yeah. Last week we got long here, and then we got long here. All right, in sim. So let's look at what happened. You made a prediction there, and I don't remember which one triggered that one, and then you made another one there, and you actually have another shot at it there. The way the system works now. All right, over here, it's really complex in here. There's actually enough price pattern information here to make a normal prediction. Nothing came through though, and we got long. Actually, no, it was off of that bar right there. Okay, bouncing off the low volume node. In this case, the low volume node is this one right here or that one, depending on. It doesn't matter; they're the same. All right. So what I want to do is I want to take this low volume node piece of what I've been simulating and add it to the existing production system. Okay, I still want to show you one example of the blasting through bit. Let's see here. All right, so there's point of controls in the way again. Hold on. It's a little bit right here where you come down to the low volume node and you kind of look like you're going to bounce there and there. So I want predictions on those bars. But then you literally blast through. So I want a prediction on that bar. All right, and that prediction will be either yes, get short, it's going to keep going, or no, it's going to fail, get long. All right, or nothing. All right. So it's these two cases. We're actually going to get another shot at it right there as you blast through. So the blast through is you need 3 bars to demonstrate that. 2 is too noisy. 3 is kind of just right. It happens right here. Okay, so we're going to get a prediction on that bar that says I'm blasting through the low volume node. Success or failure or do nothing. All right. So those are the two new behaviors: bouncing off or blasting through, success and failure. And there's 8 codes associated with that. And that's what I want. That's what I'm working on adding to the production system. I'm going to burn that in next week and then release it next weekend. That's the plan. Okay. And so the idea is, let's get the best of both worlds. Let's get we're still going to get normal predictions off that system, but then we're also going to get at low volume nodes this new simplified view of whether or not I should make a prediction. Okay, now we have to be careful of 2 things. Well, there's really one thing to be careful about right now. And that's that the market is pretty crazy. And so we want to be careful about optimizing for that craziness. And then when it goes back to not so crazy, we end up with something that doesn't work quite as well. So we have to pay very close attention to that. Given the nature of how we're approaching this, I don't anticipate too many problems. We control that with the model that we use, whether it's a volatile model or the regular model. Now, so that's what I'm planning on doing. I'm going to take this piece of the system that's in sim that looks at low volume nodes in a different way, and I'm going to add that to the production chart here. Okay, and the mechanics from your perspective, the mechanics of what that means is that there'll be a new server that implements that, and some new codes. All right, so let's take a look at the new codes here, just to give it'll make it a little bit more concrete. So all down here are all the normal ones, all right, that we use, and up here are the new ones that are associated with low volume nodes bouncing off. So either there's 8 because if you're advancing, then you're blasting up, and you either succeed or fail. So that's 2. If you're advancing, then you're bouncing down, and you succeed or fail. So that's 2 more. That's 4. And then it's the opposite for the opposite direction. You're blasting down, you succeed or fail, and you're retracing up, and then rolling over. All right. So what I'm going to be running next week will look like this: all the normal codes plus these new 8 codes. And there's one other thing that I implemented in the low volume node testing chart here that we have to talk about, and that is, if we look at it here, this is Friday here. This is the test chart, the simulation chart. And what the simulation chart does, in addition to what we've described about a different look at the low volume nodes, it also implements a choice to not get long if you're below the low volume, the value area low, and not get short if you're above it. All right, and so what that means is, if we look at the market like right here, starting from right here, all right, and then moving down, what that means is at this point in time, the system is only going to get short. It's not going to get long until it either gets back up to the edge, or the edge comes down. In other words, the value area low moves down. Okay, and what I see is that sometimes you miss that just truly awesome catch the bottom kind of trade, but for the most part, it's protecting you from sort of foolish trades, or stuff that is, I think as humans we tend to like to try to pick the bottom and pick the tops, and what this does is it goes that you're not even trying to do that. The only time you ever actually that will happen is when the value area edge is at the lows. Okay, so I am going to implement that also in the production chart. So the changes that I'll be running live next week are the new low volume node behavior, plus no longs below the value area low, no shorts above the value area high. Okay, so that's what's going to happen next week. I'm going to burn that in next week, and with the intention of releasing it the following week. Okay, I've been testing the low volume node stuff for 2 weeks now. I'm very comfortable with how it works. Okay, so that's the plan for next week. But I want to talk about one other thing here. All right, and that's the edge. So you can see here, this is the value area low right here, this pink line. The value area high it's up at the highs way up here. Okay, and one of the things that we are currently doing is that we only, no, that's not correct, Clint. So Clint says no trades in the value area, period. No, that's not right. So let me clarify. Let me find a day where we actually stayed in the value area and explain it. Here we're below. Okay, so here we're inside the value area. All right. Inside the value area. I'm sorry, I pressed the wrong button. Here we go. So here you're inside the value area. Yes. Right here. And here. And here. All of this is inside the value area. Okay. In order to get in order to take a trade inside the value area, you either have to be, at the edge, like right here. See how the bar is orange? Or down here. Or there has to be a low volume node in here. And there isn't one right now on screen. Okay. And you'll go either direction, any direction. It doesn't matter. Because you're inside the value area. You don't know which way the market's going to go. So get to the edge, and now I'll get long or short. Get to the edge, I'll get long or short. Once I fall through, I'm only going to get short now. Okay. Let me find another example. The problem with this particular example is there are no low volume nodes in the value area at this time. And in fact, the value area is really tight, right? It's only 13 points high. Let me find a better example. Index close. Here we go. All right, so here is Thursday. And in fact, this is what I was just showing, where we got the system in Sim got long at these two places. So the value area high is right here. All right, it's moving around. The value area low is where is it? Okay, so it's further down. Okay, it's down here. Okay, so all of this activity right here is inside the value area. All right. So in order for me to take a trade inside the value area, I have to either be at the edge, all right, or there has to be a low volume node. You see these right here? So these bars are orange, meaning I can take a trade there. I'm going to make a prediction there, is what that really means. I'm going to make a prediction here and here. All right, and here. In fact, you can see what's happening. The market is nobody wants to trade at this level, so the market just keeps bouncing off of it, keeps bouncing off of it, keeps bouncing off of it. What happens later? And so ultimately, that level's holding. So we're using the fact that no one's trading there as a way to understand that this is a place to get in, right? I'm going to make predictions here, and I'm going to get long or short. It doesn't matter, because I'm inside the value area. It could go either direction. All right. The only time, the thing to pay attention to is this case right here. There's a low volume node right there. Why aren't these bars orange? And the answer is I'm too close to the point of control. The point of control is the price level at which the most trading has occurred. And so what volume profile theory states, and what we see in reality, is that the market will spend a lot of time there because there's proof that both buyers and sellers think it's a good place to trade at. It's a good place to transact business. All right, so that whatever has happened up to this point in time needs to work itself out, or people are, it continues to be a great place to do business. Either way, we expect a lot of churn right there, so we want to stay away from that. Okay. All right, so no trades here, even though I've got clean low volume nodes here and here, above and below. All right, I'm also right at the edge. All right, but because the POC is there, I'm not going to take a trade. You can see right there that briefly price was far enough away from point of control, but close enough to the edge that I'll make a prediction there. But as soon as it rolls over and gets into this zone, there's like a imaginary zone around here that's 10 ticks high on each side. As soon as you get in there, you're done. We're not doing anything. All right, we're staying away from that. Okay. It gets a little tricky. Okay, so inside the value area, I'll go either direction. I have to be either at a low volume node, like right here, or at the edge. All right. Now, it can be a little confusing sometimes when you see it. The edge is defined not as this point. The edge is defined as there's a range of prices around it. So if we look right here, it's easiest. There's actually a range like that. So 10, it's 1 bar height on either side of the edge is the edge zone. And when I get into that zone, I'll start making predictions. Okay. If I'm close to the POC, I won't. But if I'm as soon as I pop out of this zone, now I'm only going to get long. In here, I'll get long or short. Okay? Because we often see that. You see it, you're seeing it right there actually. You go up to the edge and you bounce off of it and you travel back down to the other edge. All right? And so the long only or short only when you're outside the value area is really when you're outside of the edge zones. Okay, so as soon as price crosses through here, I'm not taking any shorts. All right, until I get back, I got to get back down into here, or the edge has to move up to price. All right, so inside the value area, just to summarize, inside the value area, I need a low volume node, or I need to be at the edge. I'll go any direction, I don't care. At the edge, I'll go any direction as long as I'm still inside that zone. All right, but as soon as I get far enough outside the edge zone, I'm only going one direction, long or short, depending on if I'm at the highs or the lows. Okay. This is my analysis is the reason I saw nice, really small losses on the days where I didn't turn a profit is because of that rule. Okay. In this case here, on this particular day, you can see come back down to that low volume node, make predictions, come back down, make predictions. In Sim, we actually got long here and here. Another chance right there. The POC is still up here. There's plenty of room. And then we break through the POC. You can see just very briefly you have a chance to make a prediction because you're at the edge, but you're far enough away from the point of control. The point of control and the value area high are very close to each other here. All right, so because of that, and you're not going to be doing much at this edge up here until that changes. You can see it changes relatively soon. The value area expands away from so the edges expand away from the point of control. So you got a shot at it up here. This is exactly what we want. I want to see predictions here at the edge like this for exactly this kind of move. This is what I'm expecting. For indexes in particular, we see this more often than in like commodities, where you there's a lot of backing and filling. You move up to the edge and you come back to you come back to the point of control, and sometimes you go all the way down to the other edge before you rotate back up. All right. You can kind of see here what I'm talking about, how the market thrashed around a bit right at the point of control. This is one of the reasons we're staying away from this area. Okay. Okay, so let me fix this here. What's happening now at the edge, okay, is the system is just doing the normal price patterns that we've been working with since March, right? I think that there's a similar issue where, as there is with low volume nodes, where they're too complex. Okay, but I don't have the answer yet for what is optimal. Okay. And so I'm not going to implement that in production yet because I don't feel like I have a good answer. The answer I have is safe. So if you look at like this area right here, let's look at this area right here. You can see how ugly that is. The market starts to thrash. There's a lot of price action there to work with, and the normal behaviors that I'm looking for are doing okay. I think we can improve them. I just don't quite have the answer yet on how. When I look at this, I see, there's a turn signal there that the system's going to predict on. There's a pullback there it's going to predict on. There's a lot of opportunity here to do something. So it's been, that's what I'm using right now in production. It's been working. I want to work to improve it, but I'm not ready to do that. So what you're going to start seeing in simulation are tests that are specific to this. All right. So what I'm doing is I'm building. I've already done it. I've modified the server so that we can implement the low volume nodes like I've described. Okay, still keep everything that we currently have. You as a user can completely ignore this new low volume node behavior simply by, not including these codes. Okay, and conversely, if you only wanted to do low volume nodes, you just take out all the other ones, and you would only do low volume node action. That's interesting tests to run, by the way. I'm looking at questions here. So will the low volume node strategy prevent some trades from being taken that would have been taken with only the volume profile strategy? No, it's the other way around. What ends up happening, the message that I'm really trying to get across here that I appear to be failing, is like this case here, Randy. I'm not going to make a trade there with the current method because that price, that bounce is too fast. And so instead, by adding the this low volume node refined strategy, I'm gonna get a chance at this now, whereas before I had no chance at it. Before, the system would require that bar to be closing down and then it would make a prediction, but now we're too far away from the low volume node, so we don't do it. Okay. The other issue here is that this would often be considered too risky a trade because the market's moved too far, and so we would not take it because it's whatever, it's a 187 or something. It's too aggressive of a pullback. But because we're at a low volume node, we can mitigate that risk because we know we're at a special location. Okay, so we don't prevent something from happening that would have happened before. We're adding new things that can happen. All right. So if you get to a low volume node and a normal price action pattern shows up, then the system will just predict on it, just like normal. But in addition to that, this faster price action will also execute predictions now. Okay. But to that's a really good point because it applies to what we may or may not do up here at the edge. So you can see again, I don't have to search very far to find. We get to the edge here, or in this case, we've come down to the low volume, the value area low, and you can see, the market is thrashing around making a decision here. So we need something more complex than these really fast price action patterns that we see show up at low volume nodes. And my concern is that the price action patterns that I'm using are not optimized for this area. Okay. And so I that's what I want to look at. I've started to look at it and I'm not there yet. So what I did though, okay, as part of this effort to get the low volume node stuff that I really like out into production and out to you guys and girls, is I changed the server to implement the low volume nodes, and at the same time I made changes that allow me to incrementally add price action behaviors at the edges and then test those as we go. All right, so that's what's going to be happening in Sim starting next week, is that there'll be new stuff happening here at the edges that I'll be testing out, to looking for that optimal spot. I don't quite have it yet. And just to give you to give you an idea of what we're talking about, let's say this behavior here is this is actually a really good example. So you can see, let me get rid of all these lines first of all. So what you can see happening here, all right, is the market's moving down. It thrashes a bit, moves up, down, little pullback, and then down. The way that the original, rational trader patterns look at this, assume that you are, since you're below the midline, it makes assumptions about what you're interested in looking at. Okay, and those assumptions are I'm interested in looking at turns up is the primary assumption. I'm looking for turns up, and then if I'm looking for pullbacks, there's like levels of aggressiveness. Okay, and so a pullback to just this line here that's pink might be considered too aggressive, whereas a pullback that's yellow is medium, and the nice pullback is the blue line. And it's not clear to me that that's an appropriate thing to do, all right, at each of these edges. And in fact, what we want to do at the low edge is different than what we want to do at the high edge. And so I'm prepping myself to be able to make those changes easily and test them out. Okay. So conversely, if the low volume node signals a trade, there isn't a situation where the volume profile would override it, and so don't trade. Another very good question. The priority is do the normal processing first, and if you find something, you find something. Then do the low volume node processing, and if you find something, you find something. And they are almost completely orthogonal. They're almost completely different sets with no overlap. Okay, so here, normal processing is not going to find something to do. All right, the low volume node, you got a shot at it. Here, that's the edge though. Let's find a better example. Here, regular processing will see that turn. That's a type 1 pattern long, and it'll issue a prediction. Low volume node processing won't see that. It'll give you a bounce short right there prediction. All right, and so they don't step on each other. But if they do step on each other, the low volume node processing wins because it's run second. Okay, so you get a normal rational trader traditional look, and then you get the low volume node look. What ends up happening is I don't see lots of cases where they overlap. So if you draw that Venn diagram, there's very little overlap. In fact, I can do that here. It's something like this, where this is TRT here. Wrong one. Oh, yeah, there we go. This is the TRT stuff, traditional stuff. This is TRT, and then this is low volume node. Okay. There is a small spot there. It's relatively rare. Something like that. It's not like this. Whoops. It's not like that. Okay, there's just a tiny overlap. All right, and the only reason that we can do that is because we know that spot's important. We know that spot's important. Whereas this system here doesn't have the luxury of knowing that. It was built without this concept of understanding how much trading has occurred at the price level that it's looking at. All right, and low volume node wins. Okay. Let's see here. All right, so the server, there'll be a new server coming out next week, and I'll be using it all of. I'm finishing testing up this weekend, and I'll be running it live next week to burn it in for release, and it will have the normal rational trader stuff plus this new low volume node processing. I'll burn that in next week and then release it out. Simultaneously, sort of hidden underneath the covers, there's code in the server that it's been segregated, so I can do the same thing with the edge. In other words, I can identify specific things at the edge that I like and implement that at the edges. Both the edges are just one edge, the high edge or the low edge, and then we'll go from there. When I see this, two things come to mind. The first is I really want more complex price patterns in play before I start making predictions, because that's ugly. All right, so I can do this stuff here at the low volume node because I don't see much thrashing like this. You're basically bouncing off or blasting through, and that's the majority of time that's what's happening. Not always. Low volume nodes become non-low volume nodes because price hangs around there, so that happens. But at the edge, it's a different story. At the edge, we very often see this kind of ugly thrashing behavior, and so there's a couple things to think about. One is that I want to see the more complex behaviors like are already implemented in this part of our Venn diagram. Let's make this red. In the red Venn diagram, I want to see. Because I want more intelligence in that price action before I start issuing predictions. The second is that this is really choppy, and we have a mechanism for chop avoidance. It's called wave delta chop avoidance. Currently, the wave delta chop avoidance kicks in when you get outside of this zone here. This zone, this outside of the low volume value. I'm sorry, outside of the value area edge zone. So the chop avoidance is not active until price is below this line, right? There's this imaginary 20 tick zone that's following, of which the value area edge here is the middle of it. All right, and so one thing to do is, well, maybe change the wave delta chop avoidance to include the edge. All right, that has potential benefits and potential detriments. So we got to. I want to carefully examine that. An easy thing to do is change it to not allow trades that violate the wave delta chop avoidance if you're in this zone. Okay, and that might actually be the smartest refinement to add. Okay, the reason that we don't want to do that is that again, what we talked about earlier is that particularly with the indexes, you're very often getting up here, thrashing, and then coming back down, and thrashing, and then coming back up, and thrashing. And so I don't want to take that awesome trade away. So it has to be looked at, and it has to be looked at pretty carefully, actually, to make sure that that's okay. The market's going to thrash here, and then because it's making a decision, we're at the edge, but by definition, there's not been much trading below this level, and so we're either going to revert back into the value area where everyone's happy about trading in there, or we're going to break out like we do here and go into crazy price discovery mode. And so this is a great place to enter, but at the same time we want to protect ourselves, and exactly how to do that's not really clear to me yet. And I can tell you that right now, in the current conditions, it's almost certainly a good idea to implement wave delta chop avoidance if you're in this zone. But it's probably a bad idea when things are quieter. So I might that might be the next thing I examine as opposed to looking at the price patterns in here. In any case, I'm set up now to be able to look at that cleanly, and I actually, just sitting here talking it out with you all, it's something I may end up testing tonight or tomorrow and put into the production on Monday for my burn-in use. Interesting. Okay, so that's where we stand. Next week, I'm going to burn in low volume nodes in the or refined low volume node patterns in the adding to the production system, and then with the plan to release it next week. And then in simulation, I'll be testing things at the edge. And I might, so that's given. I might do something with the wave delta chop avoidance here, also burning in next week. I'll have to see. Currently, you can turn that off and on here. But I'm pretty sure that's just outside that zone. So I gotta think about if I want to change that or not. Okay. Any last questions here? So hey Larry, the problem with the POC breakout is that you don't know that it's going to happen. All right. So Larry's talking about it. What we see sometimes is that the point of control acts as support or resistance, and you bounce off of it, and then off it goes. All right. So it's not a predictable area. Is the problem? We're interested in being able to predict what's going to happen. And when you're thrashing around inside the point of control, you don't know that it's going to break out. What we require, okay, the way that we would deal with that is, if I'm at the point of control here, all right, and the market's thrashing around, and it's going to, and your point is, I'm going to break out from there. What do? I'm going to get a look at it at the edge, as it hits the edge, all right, and there's my opportunity to make a prediction that it's going to continue or not, or at any low volume nodes between the point of control and the edge. Okay, so I'm not interested in screwing around with anything at the point of control. Okay, the concept of a breakout at the point of control is quite a bit more tricky than you might think. All right, if you want to see more, the way the breakouts work now is it just looks at the last wave. All right, and really what you want to see is a whole series of them, a big range, and that's a much bigger proposition than just, hey, let's add the 141, 151 codes at points at the point of control because you saw one cool trade. Okay, so I'm not doing anything there, not in the foreseeable future. So I think that I don't remember this. I remember the conversation vaguely, Larry. I don't remember the specifics. You have to get away from the point of control before you should trade. Is the basic message as a small account trader. You got to staying in this area is crazy. Okay. Get away from it and then get a pullback. and get in. Okay, get to the edge and take a look. All right, but at the point of control it's not predictable enough is the point. It's the same thing here. It's the same issue that we see right here. This is thrashy and ugly, and I want to stay away. This is very typical point of control behavior. All right, and we're using the point of control as the way to understand that this is a place to stay away from. Okay, give me a low volume node, and I'm all over it. But if there's a lot of volume that's trading there, then I want to stay away. Any last questions? It's got 6 more minutes. The general problem that we humans have is that we will see some cool, awesome move and want to be a part of it, and then we don't do the work to understand how often that happens. So the signal that we're looking at that would be the trigger for that awesome move, if you then go and execute that trigger, over the last 3 months, and you discover that it sucks. It worked once or twice, and that's it. All right. One of the things about what we've done here is it gives us a tool to do that work. All right. And we used to talk about that quite a bit. Okay, well go test that. Go run the replay. A dilemma that we have now with replays is that because we're using volume profile, the replays are much, much slower than they used to be. All right. So I have on my list to write the program in Python that does the replay in seconds as opposed to hours. Okay. I haven't been able to get to it because I got sidetracked with this low volume node and edge work. What I have to do is duplicate the trade management that we implement in a program. Okay, so what makes the replay take so long now is that Sierra chart is processing every single tick. Tick, 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 tick. Now, I only ever take a trade at when the bar closes. All right, so what I can do is export this data. And this, in the data, it shows me I have a bar here, the low volume node is there, the POC is there. I have all that data all in one record. And so it's really easy for me to implement that logic without having to process it tick by tick by tick. But to do that, I have to implement the trade management that Sierra chart implements, and that's really difficult. It's just difficult difficult's the wrong word. It's nuts and bolts programming. It just takes time. Okay, so all the things that you unconsciously think about doing because Sierra chart just takes care of it for you, I have to actually code. So things like my stop is 10 ticks. I'm going to move the stop to -5 at +10. I'm going to move the stop to entry +1 at +15. I'm going to start trailing by 20. My limit entry offset is 1. All of those things have to be coded, and it's non-trivial. It just takes time to do it all. So that's why it's not done. If it was easy, it would be done, and I would just give it to you. And could I give it to you? I'm not sure how hard it is to actually provide it to you for use, but I could then use it and very quickly get the answers I want. Instead, I'm somewhat hampered compared to 6 months ago, where I would make a change and I would run a very typical case for me is to run 3 months of data. The entire system was built by running, building models and then running the next 3 months of data as a test to see how it plays out. And now that's very difficult to do because the replays take too long. To do a replay for 3 months takes several days. You just can't. The iterations take too long now. So it needs to get done. I just don't think it's as important as what I'm working on right now. So We'll get low volume nodes out, and then we'll continue to play at the edge here. I can test at the edge, given the way I'm setting it up, and then we'll decide what to do next. Why would you ever get rid of... So Randy, the chop avoidance is now only implemented outside the value area. Okay? And I provided the option to not use it at all. It's up to you. The reason to have the option is that when the markets are quiet, you probably don't want chop avoidance. Quiet means, overnight range is less than 40, and daily range is in the 50 point range. But we don't live in those times right now, and it's been a good 6 months since we've had what I would call normal trading. Okay, and so it's easy to forget what it was like last year. It's easy to forget what these times are like here. All right, so just, I haven't forgotten because I've been trading for 10 years. Okay, but when the market's like this, the daily range is this low, your chop avoidance will hurt you because the market's moving much slowly and it's testing a level, and that you want a prediction on that test. As opposed to now where it's just whipping back and forth so crazy. The chop avoidance is really, really useful, what I've implemented. Okay. But currently, just to make sure you're clear on what we currently do, when you're inside the value area, there is no chop avoidance in place. And my considered opinion is that you don't need it, because the point of control acts as a chop avoidance zone. So anytime you're near this blue line, you're not getting involved. And the only time that you'll take a trade anywhere in here, you have to have a low volume node. So you already know that this is a good spot. Okay. So this is really key to understand, actually, just from a volume profile theory perspective. When you're inside the value area, this is where most of the trading has occurred. You can make some really good decisions about what to do by looking at how much volume is traded at each price level. Okay? When you're outside the volume area, when you get out here, by definition, there hasn't been a lot of trading out here, so you don't really know who already has a position, where people are laying in wait. You don't know. Okay? And so out here, this is like the Wild West when you're outside the value area. So I want chop avoidance in place for sure in these conditions. All right? And now I only want to go short when I'm below the value area low, and only long when I'm above the value area high. Okay? But when I'm inside the value area, this is a different world. This is much more like, civilization as opposed to the jungle. All right? And so in here, because there's been a lot of volume, the places where I can actually do anything are dramatically limited, because I'll only do it at a low volume node, and only if I'm far enough away from the point of control. Okay? And so you don't need chop avoidance inside the value area, I don't think. That's why I don't use it. All right? So when we're avoiding chop avoidance now, if you're using the volume profile system, you're only avoiding it outside the value area. That's the way it's implemented. Inside the value area, you end up never taking a trade if I implement chop avoidance inside the value area. Okay. All right. Okay, that's it for today. I got a lot of work to do. I'm really amped about the level of refinement that we're doing here. I think that the change to volume profile and using it to help us understand the key areas was really sound. And now we're addressing this case here. I want to make a prediction there, and I'm not. So we're addressing that. And then the edge is next up. We're going to take a look at the edge and see if we can improve what we're doing there. And if we can't, we'll still be fine, I think. If I look at last week, if I look at the regular, my production system, and then I look at the low volume node behavior in the simulation, if I put those two together, I'd be really happy with last week. All right, so that's what I'm intending to do here. We're going to put those two together. That's the next refinement, and then we'll start taking a look at the edge. And the more I think about it now, I really want to look at chop avoidance at the edge as well. So two things to test here after I get this thing ready to go for trading next week. Larry, did you download that the GoToWebinar app? So just for everyone, GoToWebinar has an app that you can use on your smartphone or your tablet and log into the trading room that way. So like Larry's traveling the next couple weeks and he was talking about taking his computer because he wanted to check in on the room, and you don't need to. The GoToWebinar app works really well. You just need the meeting ID. Okay, and the meeting ID doesn't change that often. And when it does change, I tell you, right? I send you an email and say the ID is changing. Okay, that's it for today.